Ladies and gentlemen, good day and welcome to BSE Limited Q3 FY23 Investor Conference Call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anand Sethuraman, Head, Investor Relations, BSE Limited. Thank you, and over to you, sir.
Thank you so much. Good evening, everyone. This is Anand from Investor Relations at BSE, and welcome to BSE's earnings call to discuss Q3 FY23 results. Before I begin, it gives me great pleasure to welcome Mr. Sundararaman Ramamurthy for his first earnings call with BSE after he took charge as MD and CEO on 4th Jan 2023. He is a highly motivated leader and a consistent performer with a successful track record of 38 years. Prior to joining BSE, he was the MD and Chief Operating Officer in the Indian arm of Bank of America, where his responsibilities included global governance and control of the banking entity in India and the securities segment. He has also worked with the National Stock Exchange of India for over 20 years as a senior member since its inception, where he was responsible for a significant transformation. Joining him today are the other members of BSE's leadership team, consisting of Mr. Nayan Mehta, Chief Financial Officer, Mr. Neeraj Kushreshtha, Chief Regulatory Officer, Mr. Sameer Patil, Chief Business Officer, Mr. Girish Joshi, Chief of Trading Operations and Listing Sales, Mr. Kasif Tawadia, Chief Information Officer, and Mrs. Kamala K, Chief Risk Officer. Do note that this conference is being recorded and a transcript of this call will be made available on the BSE website. Before we get started, I would like to once again take this opportunity to remind you that our remarks today will include forward-looking statements. Actual results may differ materially from those contemplated by these forward-looking statements, and any forward-looking statements that we make on this call today are based on assumptions, and BSE assumes no obligation to update these statements as a result of new information or future events. I would now request Shri Sundararaman Ramamurthy, MD and CEO, to give a brief overview of the company's financial and business performance. This session will conclude with a Q&A session. Thank you, sir.
Thank you, Anand. Good evening, everyone, and thanks for joining the call today. Indeed, I am honored and excited to be here as the new MD and CEO of BSE. I am very well aware of the challenges that lie ahead, but I can assure you that all of us at BSE are working very hard to drive the success of this organization. Let me first start with the financial updates. I'm happy to inform you that despite the volatile market conditions, BSE Group delivered a growth of 12% with total revenues of rupees 245 crores for Q3 FY2023 as compared to rupees 218.6 crores in the corresponding quarter of last year. Similarly, BSE's operational revenues have grown by 6% to rupees 204 crores from rupees 193 crores, the net profit attributable to shareholders of the company standing at rupees 52 crores as compared to rupees 61 crores. This decline is because of added contribution to the Core Settlement Guarantee Fund, we call it as Core SGF here, to the tune of rupees 16 crores at a consolidated level, which is an increase of 83% year on year. This is on account of increase or rather added contribution to the equity and currency derivatives segment. Let me talk on consolidated financials now. I would now share some of the key financial numbers on a consolidated basis for the quarter ended December 31st, 2022 as compared to the corresponding quarter of previous year. The clearing and settlement operational revenues increased by 57% to rupees 18 crores from rupees 11.6 crores. Treasury income from clearing and settlement funds has increased by 53% to rupees 22 crores from rupees 14 crores. Other operating revenue, which includes data dissemination fees, training income, and software income, has increased by 21% to rupees 18 crores from rupees 15 crores. Investment income increased by 70% to rupees 35 crores from rupees 20 crores. The operating EBITDA has reduced to rupees 39 crores from rupees 57.7 crores, with operating EBITDA margin reducing to 19% from 30% earlier. The net profit margin stands at 19% as against 27% earlier due to increase in computer technology related expenses and increase in core SGF as stated earlier. On the business side, let me start by covering our primary market segment. Fundraising by India Inc. is well off last year's pace as geopolitical uncertainty along with other macro factors affected the IPO sentiment. Notwithstanding the revision in annual listing fee, with effect from April 1, 2022, a slight uptick in annual listing related income is seen. Overall, BSE continues to be the market leader for fundraising by India Inc. with a share of 60% for equity public issues, 84% for debt public issues, having enabled issuers to raise rupees 3.9 lakh crores. The IPO momentum of 2021 has not carried over to 2022 so far, which has resulted in lower book building income for the quarter. India's equity markets faced various headwinds after record-breaking turnover levels in 2022. Facing the challenges of the current market environment, BSE's performance in trading segments were muted, but the mutual fund segment continued to demonstrate strong growth. For the quarter ended December 31st, 2022, the average daily turnover in equity cash segment stands at rupees 4,234 crores, which is down 11% as compared to the previous quarter. The average daily turnover in equity derivatives segment stands at rupees 1.97 lakh crores, down 13% as compared to the previous quarter. The average daily turnover in the currency derivatives segment stands at rupees 26,246 crores, down 18% as compared to the previous quarter. BSE Star MF, India's largest mutual fund distribution platform, continues to grow at a remarkable pace, its total number of transactions growing by 37% to reach 6.9 crores transactions during the quarter from 5 crores in the same period last year. The platform continues to scale new peaks in terms of transactions, with platforms processing a new high of 37.75 lakh transactions in a single day and a new monthly high of 2.44 crore transaction in December 22, and then once again with 2.5 crores transaction in Jan 2023. Overall, the platform achieved 101% of the transactions processed within 9 months. 18.7 crores so far in FY22-23 as compared to 18.5 crores transactions during FY21-22. Now I shall cover developments at our subsidiary companies. India International Exchange at IFSC. The average daily trading turnover at India INX, the BSE promoted international exchange at GIFT City, Gandhinagar, stands at USD 18 billion with a market share of 95% for the quarter ended December 31st, 2022. India INX has about USD 70 billion medium-term notes established and about USD 50 billion of bond listings till date. India INX Global Access platform for investors wanting to invest in global securities has grown to reach a trading turnover of US $7,369 million, that is 7.4 billion for the quarter ended December 2022. Insurance broking. On the insurance distribution front, BSE eBIX Insurance Broking, where BSE holds a 40% stake through its subsidiary, BSE Investments Limited, is now integrated with 26 insurance companies. The total premium collected is rupees 17.1 crore for the 9 months ended December 31st, 2022, a growth of 84% from the same period last year. BSE Agricultural Markets, we call it as BEAM, a transparent commodity spot trading platform to facilitate spot commodities transactions across the value chain, has now enrolled 1,220 members and executed trades worth rupees 43.7 crores in agri and steel segments on the platform during the quarter ended December 31st, 2022. The company is working closely with several state governments and their agencies for direct procurement and disposal of commodities. Power Exchange. The trading at Hindustan Power Exchange, where BSE has a stake of 22.61% through its wholly owned subsidiary BSE Investments, has been relatively modest, and the exchange is continually onboarding new members and exploring new products to be launched, which can result in higher volumes going forward. Before I conclude, I can confirm that the board of the BSE, the meeting held today, has approved the divestment of 2.5% of BSE's stake in Central Depository Services Limited, CDSL, towards meeting regulatory norms. In closing, overall, I believe we reported a sustained third quarter results amidst a difficult market environment. 2022 was a period of transition for the BSE. And as we embark on a new journey in the new financial year, I believe that a balanced business model will enable us to grow much higher. We are confident of rising to the current challenges and take BSE to newer heights. With these updates, I now hand over the call back to Anand. Anand?
Thank you, sir, for the updates. With this overview, let me now welcome you all once again to the Q&A session. Handing over call to Yashashri.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Prayesh Jain from Motilal Oswal. Please go ahead.
Yeah. Hi, good evening, everyone. First of all, welcome Mr. Ramamurthy to this esteemed organization. First question to you is on what are the initial focus areas for you to take BSE to new heights. What will be the key focus areas for you, say top 3 or 4 things that you would be focusing on? That would be my first question.
Hey, first of all, thanks for your good message and question. Initial focus areas. What I find is BSE today has its presence felt in equities and currency. To start with, therefore, my focus area will be to ensure that we are able to concentrate on equity and grow our market share there. The second area will certainly be currency, where we have some presence which we can build upon. That's a short answer. If there are further questions, I can elaborate on them.
So, one of the key drivers for the business for the exchanges has obviously been that equity derivative segment where the actual growth has been coming. The margin norms have really hit hard the cash segment, and the growth has kind of moved from cash to derivatives. So, how would you think that BSE can at least garner some market share on the derivative side?
Yeah, that's a very, very fair question. So since you asked for initial focus areas, I mentioned equity and currency, and of course, actually, I should have mentioned one more segment there, which is mutual fund. That's the initial focus area because we have some foothold there. So to develop something where we have a foothold becomes easier. And in equity derivatives at this point of time, I find BSE is not having much of a foothold. We need to develop it. While that will be certainly remaining as a focus area, first we will have to strengthen our foothold in equity and currency derivatives and mutual fund where we have a good market share. And as a follow-on and as a process along with equity, since they are related, equity derivatives will be built over a period of time, first concentrating on Sensex. As Sensex is a brand which is known to the entire world and has its merits and value and lot of recall. So that will be the next focus area.
Great. Sorry. The second question is on this, more on the financials. This settlement guarantee fund, the increase, the contribution that has been coming through in previous quarter as well and in this quarter as well. Now, how do we see this going ahead? How should we kind of read into this, and how should we kind of model for this? Because this becomes an element which we are not able to kind of figure it out.
Prayesh, line here. So, this settlement guarantee fund, as we had spoken in earlier meetings also, this fund constitution and increment contribution is dependent on many factors, which include volatility in markets, business volumes increase, concentration of positions, and many, many other things. And it is determined by an algo on a monthly basis. So to that extent, you would recall even our earlier MD had said that when we make additional contribution to SGF, that's a sign of progress as far as business is concerned. So while it might look as a hit on your P&L for the company, but it's a one-time hit wherever it comes, and it comes on increments. Means when we move on to the next level of business, obviously there will be some incremental SGF which would come. As of sitting today, it is very difficult for anybody, means an analyst or the management itself, to determine as to how much movement or incremental contribution will be there in SGF from year to year.
Okay. So just extending that point, so if you look at the cash flows that are down for you, derivatives, you don't have too much of volumes. So what actually drove this, incremental size settlement guarantee fund? October and November were very weak months, and even December was a very weak month for cash volumes. So I don't. So just try and explain me as to what really caused this SGF contribution.
Prayesh, in this year, obviously we also contributed for some SGF amount towards electronic. There was a new contribution, minimum base contribution required by SEBI. At the same time, currency derivatives volumes increased during this year. So obviously those volumes necessitated that we do some contribution towards the same. And again, as the number of members increase in our clearing corporation, obviously that's also a big reason why that position led to incremental SGF contribution.
Okay. Great. And my last question will be on CDSL. So we have to reduce it to 15%, right? Right?
Yeah, we have to reduce it to, it's a very correct question. We have to reduce it to 20%. 15%. So we will be getting towards that. There is a regulatory time limit available, so we will offload in transfers to ensure it's a smooth transition.
What is the time limit for that?
We have to do it by 2nd October.
2nd October, this year, total 5% stake, of which 2.5% you will be doing now.
That's what has been approved by the board today.
Okay, great. Thanks. That's all from my side.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to answer queries from all participants, kindly restrict your questions to 2 at a time. We have a question from the line of Vikram Kotak from A. Lansdowne Investments. Please go ahead.
Yeah, congratulations, Mr. Ramamurthy, for the appointment. And my one question has been answered by you in earlier question. The other question which I have for Nayan or you, that how do we set off this guarantee fund contribution which you are doing by way of increased charges? Because these numbers are looking like a very big number compared to our revenue. So what are mechanism to kind of set off this? Do we increase charges or any other way to do it?
I'll tell you in one particular way is this, that when you look at contribution to SGF, you are looking at the expense side. But in the consolidated, obviously it doesn't come apparent in the face of the this result. Is that right. Our income from clearing corporation has increased quite significantly over the last 1 year. And that is on terms of the margins and deposits which we have got, and also in terms of the transaction charges which our clearing corporation has collected. Right. So it's not that it is a one-way expense. And there is a corresponding benefit which is coming to BSE, which is getting accounted in our financials.
So you mean, Nayan bhai, that it's a higher than the contribution which you are doing, according to you, Motawati?
In some quarters it will be high, some quarters there will be much significant higher contribution. But overall, each SGF contribution increment over a period of time leads to an incremental revenue flow for us.
Okay. Thank you so much. Thank you, Nayan bhai.
Thank you. We have our next question from the line of Santosh Kumar Keshri from Keshri Wealth. Please go ahead.
Hi. Am I audible?
Yes. Yeah.
Sir, I have two questions. One question is that we decided to upload CDSL.
Can you speak a bit louder, please?
Sure. Am I audible now? Better?
Yes, please go ahead.
Okay. So I have two questions. One question is about CDSL divestment that we are doing now. So I wonder, isn't the timeline could have been better, because now the market conditions are not good, and the CDSL is also at almost 52-week low. So the realization that BSE is going to get against its investment would be much lesser than what it would have had it been selling a year or so back. That's one. Even last time when BSE divested 2.5% from 22 to 20%, they sold at 220 rupees a share. After that, the prices zoomed up to something like 1,500, 1,700 levels. So it's a little dismaying to realize that as a shareholder, we are not earning as much from the divestment as the market participants were buying from the offloading of shares by BSE and getting to make a lot better profit? That's my first question.
Yeah. So let me give one reply. I don't know how much that will satisfy you. If it doesn't, I will ask Nayan to add. As exchange, when we want to offload, we have to look at it from multiple perspectives. Of course, the return maximization is always there in everybody's mind who has invested into any stock. But as an exchange, when we do it, it is also the question of we have to realize we will not be able to time the market. That is difficult for anybody for that matter. For exchange, it is much more difficult because we need to follow up multiple internal and external process for taking approvals before we go to the market. So we will not be able to time the market. In hindsight, it may sometimes come across as a very good move or probably a move where we should have waited. It can come across. So that will be the sum and substance of it. So that's why always things are done in tranches over a period of time to ensure that we are taking care as much as we can in respect of return maximization without having a capability to timing the market. Nayan, you want to add something?
No, I perfectly agree with you. We cannot fit in. There is no way anybody can actually time, not about us.
So the difficulty is there. But your point is valid. Always one should expect to maximize returns. But sometimes it doesn't work for us because we are not able to do that in terms of managing the time.
Yeah, I know that, but the point is that this is the second time on the trot that BSE is not able to realize. But anyway, I take your point. Now, my second question is about SGF. So, though many participants raised a question, I just had one limited point, and that is that the interest that we are on out of SGF, does that accrue to the BSE P&L or it is earmarked to the fund and it gets credited there? How does it happen?
No, so the interest which is earned in the settlement guarantee fund remains in that fund, and it is not considered as income in standalone or consolidated accounts.
So we can take that as a cost of doing business, right? The contribution to SGF.
I see.
Okay.
And this is obviously according to the current regulations, which SEBI regulations which we have to follow.
Yeah, I agree with what Nayan is saying. Just to add to what Nayan is saying, the contributions to SGF, the competition are all regulatorily defined, and it goes according to that. Therefore, when NSE contributes the money to the SGF, which is held by ICCL, any amount of interest earned from the fund has to be retained in that fund as a regulatory requirement.
Right, sir. Okay, thank you so much.
Thank you. A reminder to participants to press star and 1 to ask a question. We have our next question from the line of Amit Chandra from HDFC Securities. Please go ahead.
Yeah, hi, and no, thanks for the opportunity, sir. So my first question is on the area of investments, that we have been doing into the new areas of growth. So we have been investing, into the INX, into commodities, and also into various new products which are in trial phase or inception phase or initial phases, but not generating any returns since many years. So what is our strategy there in terms of monetizing these areas where there is scope to generate revenues maybe in the next 1 year? So which areas you think is promising and you should start monetizing?
It's a very good question. Some of the investments that we make will be oriented toward national development and overall economic development in mind, which will be the driving force. As a responsible MII, we will be doing some of them like that. To just give the example of GIFT City. When we look at GIFT City, we are trying to promote an exchange which will be the face of India for all the foreigners to help them participate in this country's market and not allowing the Indian markets to be exported outside India. That is the idea behind that. And that is the reason why it's at a very senior levels everywhere, thought about as a very good requirement for the country as a whole for development, and that's the reason why BSE has been the first exchange to get there, to set up its own exchange and clearing corporation there, and it is growing in terms of its size and all. Does it give back money to us in return at this point of time? These ventures, many a times, as you will appreciate, have slightly long-term gestation period. Some of the things like our mutual fund platform, if you look at it, with minimum investment, it is giving maximum revenue in a short term. Some of these investments like Gift City and all, where it's a new proof of concept which we need to provide to the market, takes time. That is the reason why MIIs have to get into it, because it cannot be taken totally as a commercial venture alone. It will give commercial results, but it is a question of time where after the gestation period only you will be able to reap the benefit. The same thing will be applicable to power exchange or agri markets. You know, agri markets require a lot of development. How much it can help in nation's economic development by helping the farmers, we all know that. But it takes time to bring in people, changing behavior, making them understand. So if you ask me, within 1 year you will be divesting something and making money, it may not be wise to do that in one year to divest some of the investments. Some of them will be making good sense. Like, for example, take the case of CDSL, which we invested quite some time before. Today, it is yielding a lot of results. It's a question of we waiting, permitting it to grow, supporting it to grow, and then reap the benefit. The same thing will happen with every one of these investments because they are well thought out investments, just not only as a commercial venture, but also as a contribution to the society. That's the way I look at it.
Okay. And also, sir, you mentioned about focusing on the cash and the currency side, and also on the derivative side. But this strategy has been there for the last many years, and we have been trying to gain market share in cash. We tried in derivatives. We attained some success there, but again we are back to like around 1% market share. So what has to be done like differently there to gain market share? Or I think it's an area where it's very difficult to get some market share from NSE because it's going, it's actually getting bigger and stronger. So what's your views there?
It's a fair question, but I'm sure you will appreciate it is just 1 month for me now in the exchange. Notwithstanding that, I will try and reply you. Well, it is true that there has been a lot of efforts put on by the market and the regulator to ensure there are 2 exchanges at least in India. I'm not looking at it as, to put it differently, I'm not just looking at it as growing BSE's market share. You look at it from a slightly macro perspective. Do you require only 1 exchange in India, or do you require to have 2 exchanges in India? One need not be 50% is not what probably we'll look at it. One other exchange should be vibrant to take care of many of the needs whenever any circumstance warrant it. And I am sure principally everybody agrees now. Principally people all see having a single exchange is not a good idea. If we start talking in terms of, in many countries it's only a single exchange, single airline, why in India there should be more than 1 exchange? The question no longer remains a question. I think the answer is clear in many people's mind as to why you require more than 1 exchange, which has to be vibrant and in existence. So when principally everybody is in agreement, what is the effort going on into ensure the vibrancy for the second exchange? Why it is falling short? What can we do to attack it, to help it to grow is the question then. That becomes the strategy. What I find is while intraday interoperability is required for MIIs, which is not totally implemented by all members for the clients, I think that is a very important requirement. So this is one idea I am talking about. Soon we will be reviewing all the areas and we will be coming out with some product differentiation. In the coming days you will get to see. As I told you, it is just 1 month and 2 days in terms of number of days, and in the number of days in office is just 20 days. Yeah. You will see certainly some product differentiation happening in cash market and in currency. Everywhere you will see. And you will find some new products being talked about. So, and you will also see that we going and advocating to the system developers, to the brokers, and to the clients, how if there were to be 2 vibrant exchanges, it will be on a day-to-day basis helpful for them. For example, if somebody as a client finds a better price in BSE to buy, and after some time he finds a better price to sell in NSE, if the brokers do not enable intraday interoperability at the front end for client, they're not going to do it. If they're not going to do it, it's just not BSE losing volume. It's actually the client not making money and the broker not making money. Leave alone the money. If the on a turmoil, if there is this type of an arbitrage facilitated, don't you think the price decline will be arrested? Because no, there is clearly a price finding very imminently happening and very fast happening. If it does not happen, you will find the stock declining in a very faster pace to touch the bottom and then climbing up slowly back in one exchange. I hope you understand what I mean.
Yeah.
So to cut a long story short, give me some time. I am reviewing things. Certainly you will find new product differentiations, product approvals coming in place, and we talking to brokers to strengthen the entire vibrancy of a second exchange. I would not call it as making BSE's market share more. Providing a vibrant exchange to the economy is today our prime test.
Yeah, sir. Thanks for detailed answer. And so my last question would be on what are we planning with the cash that we get from CDSL? So will it be used for investments or will it be used for higher shareholder payout?
So it's a very, very important question that you are asking. See, the question of utilizing the proceeds towards further building capability to deliver to the shareholders or to make payment will also be governed by regulatory restrictions as to how much what we can do. Clearly, the intention will be to put the money to use for shareholders' benefit. That would be the driving force, because it is the shareholders' money which has gone in as an investment. That is what is coming back. The effort will be within the four walls of regulation, whatever permitted, will be to maximize or rather optimize shareholders' wealth. That will be the goal with which we will be working.
Okay, sir. Thank you and all the best, sir.
Thank you.
Thank you. A reminder to participants to press star and 1 to ask a question. We have a next question from the line of Prayesh Jain from Motilal Oswal Financial Services. Please go ahead.
Yeah, hi sir. Just a couple of questions on financials. So if I look at depreciation, it's at 17 crores versus a much lower run rate in the previous quarters. So what's the reason for the same?
Prayesh, in the current year, there has been a lot of investments in IT, hardware and software. So that has resulted in higher depreciation. So that is one of the major reasons for increase in depreciation.
Okay. Secondly, on the tax rate, it's been much higher at in the previous quarter 42%, in this quarter 33%. How should we think about this tax rate, and going ahead, how should we look at it?
For going forward, Prayesh, you can consider 33% to 35% as the normal rate for us. The reason being that we are currently offsetting our batch credit which is available with us.
Okay.
For that reason, whatever means all our focus is towards earning taxable income, and that which attracts the maximum tax rate to utilize the MAT credit.
Okay. And just one last question or follow-up question on the previous one was Star MS. We have earlier kind of hinted at selling that asset completely. Any incremental thoughts out there under the new CEO?
This is a good question, but look at it this way: the entire retail, in a big way, is looking towards mutual funds this way. These days. If you look at it, when FIIs or rather FPIs, some part of last calendar year, they were exiting India for whatever volatile reasons. You find that suddenly the mutual fund contributions is increasing, right? So there is a good amount of penetration that is happening towards mutual funds because of the clear attraction. You see, if as an individual I want to have a balanced portfolio, To buy 20 shares and 30 shares and create a portfolio, manage it, monitor it, it's not going to be easy for me. I'm a small investor, and the more and more the financial conscience and the financial literacy increase, I think that mutual fund transactions are going to go up. If that is the case, is it right time to think about divesting and coming of it? Or is it that we should grow it more organically? Because these are all linked, right? So the mutual fund transaction will get linked with multiple things. So should we look at and explore all those areas? What will be on the interest of shareholders and what will create value for the shareholders is one question which repeatedly comes to my mind. While I may not have clear answers, at this point of time, my inner feeling is that we should do more to develop this even bigger platform. The amount, you saw a lot of new highs we are touching on a daily basis.
Yeah.
If this is what it is, clearly the market is loving this product, and clearly the market feels that we are serving them. That's why they are coming to us, right? So if that is the faith that the community is reposing on you, is it that you should grow on that faith or you should encash it is one question which comes to me repeatedly. I feel at this point of time the indication is more towards at least putting in some efforts to see how do we grow it. Well, this is today's view. As sometime before Anand said, tomorrow the factors may be different and their views may differ. But at this point of time, this is a very encouraging area where the faith and love and affection shown by the market to our platform is very high. I'm sure you agree with me.
Yes, absolutely. And mutual fund industry is something which the entire industry is looking forward to. But the challenge is the regulator seems to be kind of in a mood to even hit the commissions and distribution expenses out there. So do you see any challenge on your expenses or on your charges that you levy today? Do you see any challenges to sustain those levels, or do you think that that should be coming down?
See, that would be sort of speculative for me to say. I wouldn't know. And whatever, we are working under a regulated atmosphere. Yeah. Within the regulated atmosphere, we need to deliver value to the investors of us and to the investors in the market. We will strive hard there. And we will sure that we will do things which will benefit everybody, the market, us, and the shareholders.
All right. Great, and all the best.
Thank you so much.
Thank you. We have our next question from the line of Vikas Kasturi from Focus Capital. Please go ahead.
Thank you, ma'am. Moderator, am I audible?
Yes, you are.
Yes, sir.
Okay, great. So welcome, Ramamurthy sir. Sir, I had a few questions regarding Star MF. So if you could just help me understand a few nuances of this business, sir. So, for example, I believe one clear tailwind for this business is that there is a shift from paper-based application or paper-based transaction to a more digital kind of a transaction. So, and I have been totally surprised because every quarter I see a new Star MF hitting a new high. So I am just wondering, sir, out of the total universe of all mutual fund transactions, approximately what percentage would go through Star MF?
About 50%. That's what is my rough estimate.
The entire universe, about 50% of the transaction goes today through the Star MF platform.
Okay.
More than 50%.
Okay. Okay. And so the other question is, sir, what is stopping the other 50%? As in, have we not reached those towns, or what is stopping the other 50%, sir?
No, not necessarily stopping. It's like this, you see. Today, even just to go back to the era where you did not have Star MF, right? So some people still prefer to invest only directly, right? So they may go to individual mutual fund websites, register themselves, maintain a user ID password, very stringently and regularly every second month change it. They like to do that because that is some type of people, that's what they are used to for ages. And they do not want they feel that if they directly invest, the return for them is some few basis points more. That is one class of investors, and they will continue to be that way. And there are some people who want to go to a single bank and open a bank account and a demat account and a trading account under their trading securities and also a mutual fund in the same bank account. And they have a relationship manager attached to them. And the relationship manager comes and tells you, change this portfolio, you do this, you do that, and he gives an advice. And they tell yes, same, and he goes and does it in the same platform. So that is another type of investor. So these are all standard set of people who have been in existence for quite some time. Now you are having a new paradigm. You are bringing in an exchange platform where you are using these distributor and trading members who are used to this type of platform to make more and more people understand this and access this. So these are all the new set of people, in my opinion, who are coming in. That's why you will always, in my opinion, have all types of people. Like, for example, there are some people who go to Kirana stores, some people who will go to a mall, some will do online order entry for getting even their groceries. So I think it's this multiplicity of the market is what is making it vibrant and interesting, and I think that will continue. I think we will not be able to say that at some point of time 100% of the volume of all mutual fund transactions will come only through Star MS. Because people with different requirements and different preferences will continue to exist. That's actually what, in my opinion, helps in innovation. That's what I feel in this. I'm not sure how much you agree with me.
Sure. I'll take your view, sir. Sir, a related question on Star MS. So is there, does this bring in some sort of stickiness for the mutual fund distributor? Suppose he has 10 clients and he uses Star MS for his transaction. So is he kind of getting locked into the Star MS in any way, sir?
I feel so, because what happens is, see, today everything is technology. So if somebody is bringing their clients into it, they need to also develop something from their front end. Every technology is an investment, so there is a cost associated with it. So people would like to maximize the benefit arising out of it. So willy-nilly, there is clearly a stick, and also then some of the activities which they need to do, they are able to depend on the exchange platform to get that done for them, right? So clearly there is a benefit for the investor because it's one-stop shop all, right? And for the distributor, it becomes helpful because part of his work is being taken care of by the MIA which is operating it, and for MIA it's beneficial because it is bringing in more clients to it. Slowly and steadily, they will also start looking at BSE equities. There is a synergy capability available here. It's a big set of clientele whom you are serving. At some point of time, this may spill over to other segments as well. It's a question of time. It's a question of how we put it across. So I think if you answer your question shortly, I feel there is stickiness, and that's why people are building on it, and that's why it's growing.
Got it, sir. And one last comment from my side, not a question, but more like a comment. Sir, I've been a shareholder of BSE for over 4 years now. And so my request to you is that there is please continue to invest in newer products because these tend to give us exponential growth like Star MS and CDSL have shown us. So that's just my humble request to you, sir. Thank you very much.
No, our humble pranams to you for continuing to be our shareholders. We really appreciate the faith that you are reposing in us, and it is our promise that we will do whatever we can in our powers to ensure that your interests are taken care of, and we will certainly always be looking for newer products through which we can serve the market and serve our investors.
Thank you, sir.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. We have our next question from the line of Santosh Kumar Keshri from Keshri Wealth. Please go ahead. Mr. Santosh Kumar Keshri, please go ahead with your question.
Am I audible?
It is very low. Mr. Keshri?
Am I audible better? Sorry for...
Please speak.
Hello, am I audible?
Yeah, you're audible, but there is a good amount of disturbance from your line.
Mr. Keshri.
Hello, am I audible?
Sir, there's a lot of disturbance on your line.
Okay. Sorry, madam. Then I'll get it.
You'll get back in the queue?
Yeah, I'll get back.
Okay.
Thank you.
Thank you. I would now like to hand the conference over to Mr. Anand Sethuraman for closing comments. Over to you, sir.
Thank you everyone for all your questions. Should you have any further questions or requests for any particular data as such, please write to us at bse.ir@bseindia.com. With this, we would like to conclude this call. Thank you.
Thank you.
Thanks everybody for your interest in us. Thank you so much.
Thank you. On behalf of BSE Limited, that concludes this conference. Thank you for joining us. You can now disconnect your line.